of games, hundreds of studios, dozens of Hub Market partners, an industry-leading Hub wallet, and just one API. Hub 88 is connecting businesses to a world of limitless content where the possibilities are endless. Hub 88.
Hello and welcome to yet another episode of Next in Depth, where I am enlisting the help of expert guests to help me uncover the biggest topics in and around the online gambling sector. Now, I know what you're thinking. Connor, what's happened? Clearly, you've forgotten your guest. You're on your own. You're staring down the lens of the camera like a madman. Something's gone terribly wrong. But no. Don't worry, in just a few minutes, I've got a very special interview coming up for you with an exceptional entrepreneur and somebody with deep experience of the topic that I'm going to be discussing today. So don't panic, the expert is on his way. The topic I'm going to be talking about is all about M&A, but specifically, I want to talk about how acquired assets are actually integrated into their new parent companies post-acquisition. Now, the reason I'm looking at this is because obviously M&A has had a huge impact on our sector in recent years. We've seen a great wave of consolidation, and that continues to happen across the market. Sometimes we don't get anything for a while. We see no activity. We think, what's going on? And then all of a sudden, they just start falling like flies and people start acquiring businesses left, right, and center. It seems to be a kind of cyclical thing. But that's not what we're going to talk about today, because usually in the news and in the media, we love to talk about speculation and rumors about who's going to get bought and by who and when and why and where. And don't get me wrong, I love a bit of industry gossip as much as the next man. But the problem I do have with these kinds of discussions is that it seems like all of the attention seems to be on the agreement of the deals themselves. So we love to talk about headline numbers. Oh, it's a $20 million deal, whatever it might be. But it just seems to me like once that acquisition goes through, unless you have a very deep interest in a particular company, either on the buy side or the sell side of that equation, it seems like that's where the conversation often ends. And I want to change that today. What I want to find out is what happens after all that process. So once the deal has been struck, the money has changed hands, the contracts are signed, and the acquisition has completed. Now it seems the cameras are off. The industry's attention has long since moved on to the next big thing, and nobody's talking about these deals anymore. But what I want to know is what actually follows on. What's that process like when it comes to integrating new assets into a business? How does that work? Let's talk about the mechanics of it. Let's get into detail here. So to find out, a couple of weeks ago, I was very lucky to be invited into EveryMatrix's new offices in London by their CEO, Ebbe Groes. And Ebbe sat down with me for a little while to talk about exactly this topic. It's something he has deep experience of, having completed multiple acquisitions over the past few years, and he remains in that process of integrating them into EveryMatrix's core offering. Now, before I get to the interview itself, I should provide you probably with a little bit of context. So I want to give you a bit of background on the deals that Ebbe and I are going to discuss. The first one we're going to talk about is EveryMatrix's acquisition of FSB Technology, which is a London-based full turnkey sportsbook supplier, and its acquisition was announced in July 2024. So it's been a little while in the making now. That deal was signed, EveryMatrix brought them on board, and I'm going to find out what's happened since then. It's been a little while. Things are going pretty well. No spoilers, but we'll see a little bit about Ebbe's point of view on how that integration has taken place. So that deal in particular had a very sensible rationale behind it. That was all about adding additional clients to EveryMatrix's client base. It helped the business to enter some new markets, including the UK and Ireland, as well as some African markets. And crucially, it brought some much needed horse racing experience into the business, which was something that was lacking in EveryMatrix beforehand, and they've bought up those expertise, and they're still now in the process of integrating them into the business. So we're going to find out all about behind the scenes of this FSB Technology integration. Secondly, we're also going to talk about EveryMatrix's acquisition of Fantasma Games, the casino studio. So it made an 18.5 million euro public offer for that business in September 2024, which subsequently went through with the intention of enhancing EveryMatrix's iGaming content capabilities. And without saying too much, the integration of that business has been very, very different to that of FSB Technology. But I won't say too much just yet. I'll let Ebbe explain. He knows this in much more detail than me, of course. And so I'll leave it to him to explain what the differences were in those business integrations. And finally, we're going to touch just briefly on the acquisition of DeepCI. This, a third acquisition, looks very different to either of the other two. So we're beginning to see a little bit of the variety here and how integrations differ from one company to the next. So DeepCI was acquired back in 2023 and became a part of EveryMatrix's affiliate product. Now, that, as I say, that acquisition was handled very differently to the other two. And I think there are one or two lessons learned, let's say, from how to do things differently moving forward. Maybe one or two things that could have been done a little better. So I think that's enough from me for now. I think I should stop talking, as people are always telling me to do. I think it's time that we run the interview and let Ebbe do the job, as he does so well, of explaining just what the process of integrating those acquired businesses has been like so far. Let's run the video.
Ebbe, thank you for having me here. Thank you for inviting me to your, if I may say, lovely, swanky new offices in London.
Swanky, I like it.
Pretty nice. It's been a lovely day. It's clearly a very exciting time for EveryMatrix at the moment. You've got your new office here. You've completed your acquisitions of FSB Technology and Fantasma Games. There's tremendous growth that we've seen today in your Q1 results. So I think the new office is a kind of reflection of that. It's a little symbolic of the journey that you've been on. And
you picked up on that, did you?
And where, and where you've arrived to.
No.
Yeah, so I really want to talk to you about the acquisitions today, but I feel like sometimes in the media we love to talk about numbers. It's great to get a big deal. We love to talk about when deals are agreed and the negotiations that go on behind the scenes and the motivations behind a deal. But I feel like that all kind of drops off sometimes once the acquisition completes. We say, okay, job done. That's it, it's over. But of course, in reality, this is when the real work starts, right?
Indeed.
You know, it's a long process. You've got past that negotiation stage, and now, you know, the challenge is to integrate those businesses into your own and deliver a return on that investment. So my question for you to start off, we know what the rationale behind the FSB deal is. There's a lot of synergy there. There's obvious, you kind of mentioned it earlier today, you're essentially buying revenue and adding that to your business. You're adding new clients, you're creating synergies between the two teams, and you're entering new markets as a result of that. So if the price is right, there's a perfectly easy to understand motivation behind that deal. What I want to know is, the money's been handed over, the deal's gone through, the contracts are signed, FSB officially belongs to EveryMatrix. What happens next?
Yeah, first of all, you're very right to say yes, the majority of workforce starts after. We tried a hand on a couple of small acquisitions before, so we felt we had some idea about how to manage this. What we liked about the FSB acquisition was that we knew from the get-go that we would have no tech integration whatsoever. And then that's no disrespect to FSB, because in some areas, clearly they had a better product than us. They had a better horse racing product, they had a CRM product, and on the marketing side, we felt they were better. But we knew that they would be foolish to try to take this and merge into our technology. So that was, I mean, I would say one good thing we did was we did that right. So we set out to say, okay, now we have to build everything we need to migrate every single client over and make sure there's no, or at least no significant gap in terms of features. And this comes with a compliance requirements, etc. But most of all, of course, the horse racing product that we also present today. So this was a very important step for us, that we did not have this. It allowed us also from the get-go focus on saying our end goal is that every single FSB client is operating on EveryMatrix platform, which also means that we have a fairly good idea about what should happen to the FSB organization and how this could strengthen us, not from them coming with technology, but with them coming with insights, experience, knowledge, relationships. So to keep those things. So something went well. Then there was that first phase. I feel we dealt well with the human resource part of it. Not particularly easy, maybe in some aspects, but yeah. I'm very happy with what we retained. Of course, we had to make reductions. You're running 2 teams, running 2 platforms. Obviously, this is where the cost changes come, that the clients migrate to one. But yeah, this worked well. What has been maybe a surprise to us is how hard it is to get all the business parts migrated. And once you think it's maybe not so difficult, yeah, you go. You're probably very happy now to know that your contract is not with FSB, but it's with EveryMatrix, a glorious company in our own understanding. But these are operators that have signed with FSB, put their trust with FSB for better or worse, and in some cases maybe not gotten what they bargained for, but nonetheless, this is where they went. This is the decision they made. So for me to come and say, actually, you are a contract with me now, and I expect to be greeted as a conquering hero, and I'm coming with resources and much more staff and much more bandwidth, and I believe, honestly and genuinely, able to help them more. But I should not expect that this will be as welcome as I have in my mind. I would not say that we have lost more clients than we expected, and we did expect some churn and so on, but maybe have underestimated just how difficult it is to tell someone you bought a Volkswagen and here's the Renault instead. But I love Volkswagen, I mean, it's German and so on. Oh, Renault. This was tricky, and it's taking months of work and a lot of dedication, and good work also from the people here in the London office who knew these people and quite early on bought in. But this has been the struggle in this case. You might have thought that delivering the features and becoming compliant in UK and South Africa and in other areas and delivering a horse racing product, like normally this would actually consider a big achievement. But in reality, these were things we knew we could do. We had this fully in our control with the input of the FSB guys telling us what they really needed, because we had more bandwidth than the FSB guys had. For them, it was a good thing. So the FSB staff embraced it, but to get the clients to embrace it, this was surprisingly difficult. We're getting there. We launched, happy to say, the first client went live this week on Tuesday. This is a very big achievement for us and really starts the serious migration of the clients. Once that's over, then we can put a flag down and say, okay, who did we manage to bring over and measure our success by this. But yeah.
So how did you actually manage that kind of messaging process and getting that across? Like you say, it's obvious to you what the advantages are of migrating to EveryMatrix. Not everybody's going to see that straight away. Is that a process that started immediately when the acquisition completed, beforehand even? What was that like?
We started as early as we could. We knew it was going to be an issue. There are limits to what you can do pre-closing. You are limited by an LOI you are signing, and there's other things that restrict you from taking contact even to clients. There's mistrust. My baby are just there to poach clients and get the Rolodex. So there were limits to what we could do. And in hindsight, if I could somehow have gotten this started earlier, I would have. But I understand also why it was difficult. we did try quite, genuinely to reach out very early on, establish meetings and so on, invite people to come and visit us, but we didn't do enough. We should have done more of that, more and yet more. We still kept this illusion that we would be welcome more than maybe we were. This is turning around, but yeah, it would have been better if we had put even more emphasis on this early on.
Yeah, no, it makes sense. Some learnings there for
Yeah.
any future deals
Yeah.
that may come down the line. In terms of the integration of the actual teams, what was it like laying the foundation for that work as well? I know there were obviously some serious challenges, difficult things for management to do, and difficult, of course, for those who have ended up not staying with the company. So what was your approach to that like, and what were the major challenges there?
We try to be transparent, and of course there's limits to how transparent you can be, but we really tried to manage quite quickly to let people know what their future was. We're also in a position where we could give reasonable compensations to those that either were leaving immediately, or where we said, we would love for you to stay on for a temporary period while you help us to manage keeping the FSB technology stack up and running until we have people migrate away. So essentially, these were the two messages we had to people that were leaving. And by and large, I felt that went well. One shouldn't underestimate the insights of people in an organization. People are not idiots. You are aware as an FSB employee that your company is loss making. You are aware that your owner is putting in millions of pounds every year to ensure the survival of the company because you are not cash positive. So in the end, the company will simply cease to exist if nothing else happens. So for this reason, I felt that people were grown up, mature, professional about this, that the dialogues we had were straightforward and honest. With almost no exceptions, I feel that this really went quite well.
Okay. And in terms of the team that's here today,
Yes.
you've taken two teams and integrated them together. Were there any unexpected challenges in that process, or did they mesh together just as you were expecting and hoping?
I would say just as I hoped. Because I didn't hope that your brothers and sisters from day one. I hoped that we would bring people about, and I've over this period. I mean, it's been 9 months. It's not a long time, and I feel this has happened. I feel that we, by planting this 24-story flag in the center of London and putting this team on top of this flag, has also shown our dedication and willingness to invest and commit to this. We are not here for short term, and so I knew this. We knew this from the get-go. So we also felt it was good that we were able to say from the start, we're not here to destroy and tear everything down. We're here to keep some very, very important and valuable assets, which are you people. We understand if not everybody thinks that this is the height of their career, that this is happening, but we can also see and explain how this can benefit you, things that you wanted to achieve before and could not because of scarce resources, and that you could now. And so I'm grateful for the way we have been received, and for some key culture bearers, if you like, key parts of the management, people who have built this and took part in helping with this migration, even as its migration away from a structure that they built themselves.
Yeah.
They helped bring this along, and I'm grateful for that.
Yeah. Oh, that's good. I'm pleased to hear it. And talking of scarce resources and being cash positive, of course, EveryMatrix's resources are not scarce at the moment. You funded both this acquisition and the Fantasma acquisition with your own cash flow. There was no dilution of shares or fundraising that was needed. You didn't take on any debt to fund these acquisitions. What's the impact of that when it comes to integration compared to, for example, if you'd had to take out a loan to fund them?
The key impact is that we are playing with the house money, and if everything fails, as well it might be in some situations, then I can look back and say, God damn it, but I can go home and this was money I put aside, and I can afford to lose. If I had taken a loan, if I had taken investors on board for the ride to make it happen, I would be in a much more of a pinch to actually deliver on this. That's not to say I don't want to deliver. I very, very much want to deliver, but I know that I can afford not to. And this, of course, is a luxury. If we had made even larger acquisitions, we would not be in this situation. So we also see this, and they are two very quite different acquisitions, these two. We also see this as a way for us to learn, and worst case, pay some very expensive learning money, but learning money that, with the situation we are now, maybe will pave the way for us if we were doing something at 100 million or 200 million euro valuations, where we felt that we would then know really how to do this and go about it in the best possible way.
Yeah. So when it comes to bringing those businesses in, do you think that doing things in that way has given you or kind of allowed you to express, let's say, your appetite for risk? Would you consider you have a good appetite for that?
I think a very healthy appetite for risk, yes. And of course, I mean, any entrepreneur will tell you this: you don't start a company if you don't like risk. It's as risky as it gets. But in this case, yes, very much controlled risk. The key thing in these situations is if you take over a loss, at what point can you then say, okay, I'm going to cut my losses? With FSB, one key thing for us was when our CFO could report from this month on forwards, FSB at the entity that we have now is actually cash positive. We achieved this several months ago. Thanks to the layoffs, yes, thanks to various optimizations we did. We run a sports business. We did not need much of the data that FSB was paying for from other providers. So there were various cost synergies we could realize early on, even before the migration was done, which means that right now, I mean, I'm now at this phase of recovering already, and that happened even before we had the first client migrating, even as we were still paying for hosting a team to maintain the existing platform. So there's pure upside from here on. So the hard part of doing acquisition is when you take something, it's loss making, and you say, okay, well, I really, really want to make this work. So maybe give it another year, maybe another 2 years, or because I really want to prove myself right. It becomes a matter of ego rather than a good business. So FSB is not in that situation anymore, and I can, like, in this aspect at least, I can chalk it down as a win because we managed to get to where, if we end up in the end, maybe we have lost money on it. I think we will not. I think we'll actually make a very good business out of this. But for sure, even if there's loss, it's been capped already because we're already in the positive now for this acquisition.
Yeah. Now, thinking about Fantasma, you've already mentioned it is a different acquisition, and I'm sure that brings with it a very different style of integration. It seems to me there are parallels in the way that these businesses are being integrated, which is to say that they are actually both being integrated into the core EveryMatrix ecosystem, let's say. They're not going to exist in silos and exist as separate business units. They're really melding with your existing business. But what were some of the key differences when it came to integrating Fantasma?
The absolute key difference is that in the Fantasma case, we wanted to preserve the technology. We were already EveryMatrix producing slots games. We looked at Fantasma and say, you guys are better at this than we are. We wanted, with this acquisition, to acquire a company where we really said, hands down, you're better. Now, teach us. We are your willing students here. And this, again, when we come to surprises, I was surprised about how difficult that has been. In this case, You say, okay, whatever you do, that's right. We will follow and follow your approach and try to say, well, Fantasma, you're good with your 50 people, but I don't know, let's be 100. We have the bandwidth for this. We have the resources for this. We want to take the Fantasma away and make it bigger. And what you're doing there is you are enforcing a shock on an organization that has been thriving and chugging along very, very happily and producing good numbers. Fantasma was cost hundreds of FSB, a profitable business. We knew this already. We are adding EBITDA from the get-go, from the first month of owning Fantasma. We are contributing. So here the problem becomes not overwhelming the team that you take on board by giving them, okay, now you have to do all these things with our people. In the FSB case, we are running a show. This is what we do. Bum, bum, bum. This is the development, our development. You help tell us what we do, but all of the execution is done by us, so we know how this will pan out because we're executing and we know how to execute. In this case, you ask somebody else who's maybe not so prepared for this to do the execution, and this that actually is quite difficult. It's a little bit like if you came to me and say, okay, you're doing great, but now please, buy whatever, mention some big company and run this, and I have to go from 1,500 people to 5,000 people and just gobble that up. And I might be good at my job, but it's a shock to my system and my organization that I might not be able to endure. I've had the pleasure and the luxury of growing incrementally and organically over 2 decades almost. So this gives me a chance to do things slowly and carefully and learning from mistakes. And so we didn't really give Fantasma a chance for this. And so this gave some early growing pains in this. Thankfully, the core team is there. Thankfully, they're churning out good games. But we have quite a few steps left before we can say the Fantasma way of doing things has been broadened out to our content division as well, and that we're really quite satisfied with how this is working out. We have lots of synergies, lots of things we can do together, but there's also still quite a lot of work together, work left to achieve this.
Yeah. So what impact has the Fantasma acquisition had on your, let's say, your strategic thinking overall for the business as a whole and your goals, your objectives? Do you want to change your revenue mix and lean more into the casino than the sportsbook, or what were your thoughts on that?
Not so much. We see, the whole content part for us is still for us a supplementary part. Okay. So there are some of our competitors that run a platform business, but really the majority of what they do is content. And this is both small and very large companies where still content is really the core of what they do. For us, it's the opposite. The core of what we do is platform. 9 out of 10 of our top clients, we're delivering the full solution to them, PAM, sports, casino, payments, the whole lot. So we didn't believe that Fantasma would change our business model as such. Okay. What we believed was it would help us with diversification. It would add EBITDA. Diversification, of course, and as a volatile market as our market is good. You never know when the next regulator strikes and destroys one wonderful market for you. So this was a key objective for us. But in terms of the proportion of our revenues, in terms of the way it would change our prospects of signing new deals, it was not particularly large.
Yeah, no, it makes sense. Now, I want to take a little step back in time, if you'll come with me, to 2023 when you acquired DeepCI. And we saw today in your Q1 results that obviously some parts of the business are not delivering quite the same results as others. Would you say that there were lessons learned from the acquisition and integration of that business a couple of years ago that have helped inform your strategy for the latest ones?
I wish I could say yes. If maybe we had done that a little bit earlier, then I would say yes. there's certainly things there which where we, a little bit like with Fantasma, where we are trying to put two things together. This is just quite hard. And I think probably at the core of why we're struggling a bit with this right now is not because the energy is not there and the brains are not there, and but taking two teams and say, yeah, please go ahead and be one team. Taking two sets of technologies, please go ahead and make this into one. And you're smart, you'll figure it out. Not exactly what we did, of course, but yeah, this is really quite difficult. And maybe with hindsight, we should have run this tighter. Let's a little bit more top down. We have a tendency in our company to try really quite hard to go bottom up and let people, if they are capable, really run with things themselves. And if there's one learning I think we took from this is that we try to keep a more tight process for both the Fantasma and the FSB acquisitions. We established a steering committee. I was more involved myself, weekly meetings, overseeing clear KPIs for what we want to achieve, which we didn't have early on. And I think it's helping us. So in particular, as I said, when you have to ensure that the teams, and in some cases even technologies, that they gel, it will not happen by itself, and you have to have somebody sitting a little bit above and pushing these atoms together into making energy.
Yes. Well, I guess the more the business grows as well into the future, the less resource and time you personally are going to have to be able to oversee these things. So if I can ask you a final kind of question, which I have to ask, of course, where are you looking for other potential M&A activity in the future? Have you learned anything from these past deals where you think, now I know what we're missing and we've got to get hold of this?
At least so far, what I can say is the FSB type of acquisition where you take and you're more looking for market than you're looking for technology.
Yeah.
This part, I would say, that I think is a reasonable learning. What FSB deal did for us was simply to accelerate things. We could very well have done our own, but was it worth the amount of money we did to accelerate us into UK, into Africa? Right now, I would say absolutely. I'm full of respect and admiration for companies that manage to go from where they are and penetrate a new market. This is really quite difficult. And it's so much easier for us to win deals where we are well known. We have no business in Latin America. Mm-hmm. I will come and present EveryMatrix. They never heard about us. Yeah, we are great. We have that. No idea. So here FSB did this work. FSB managed to win this trust, and we piggyback on this. We piggyback on those relationships. We get these clients live, and yes, with some difficulty and some effort, yes. But once that has happened, then we have a footprint, and then we have the credibility to win more deals in the UK and win more deals in Africa. And when I look at the sales pipeline that I get presented from our great Daniel that you met earlier today, it's visible. We can simply see that there is such an effect, and there are deals coming. The secondary effect, if you like, of the FSB acquisition. So yeah, if you ask me, is more coming? I would say I hope so. And in which direction? I would say certainly this is one area where I feel that we are making headway.
Yeah. Well, thanks, Ebbe. I really appreciate you giving me a little peek behind the curtain and some insight into your strategy and the practicalities actually of integrating these businesses together. It's no mean feat. I know it's very hard work, and it seems you've got some very happy people here on that journey with you. So thanks for being with me today, and I hope I can come back and catch up with you again soon.
Let's hope so.
Thanks, Ebbe.
Great.
Well, there you have it. I think, always interesting to talk to Ebbe, and I'm really grateful to him for giving us such deep insight into how things have worked internally at EveryMatrix. Not everybody likes to share so openly what they've been going on, what's been going on behind the scenes with their business, but Ebbe's a very, very open person. He's very generously shared a great deal of insight with me there. For me, I think one of the things that's super interesting about this process at EveryMatrix specifically is the fact that it's still a private company. I mean, it's a huge organization. It's got more than 1,400 employees across multiple offices globally. We recently saw their Q1 results where it delivered net revenue of well over 50 million euros, EBITDA of 28 million euros just in Q1. So the reality is that this company is a lot bigger than even a lot of the publicly traded companies that we report on. It's certainly big enough to be listed if it wanted to be. But because it's privately owned, and as Ebbe explained, because it's able to fund these deals with its own cash, that also makes it an incredibly agile and dynamic business for its size. Now, obviously, this is a little glimpse into the world of these business integrations. Every single acquisition that you can look at is going to look a little bit different when it comes to integration. But I think these examples have really helped to demonstrate that in a very clear way. So I had a great experience going into EveryMatrix and having that peek behind the curtain with Ebbe. He's a super interesting character, as many of you will know already, and I'm sure we'll see him again one day on Next in Depth. But for now, that's about all I've got for you. In the next episode, I'm going to be exploring this very same question from the opposite side of the table. So Ebbe is a big buyer. We're going to see what business integration looks like when you are the seller. So I'll be talking to some successful entrepreneurs in the sector who've sold their businesses and see just what this whole process looks like from the other side. That's going to be coming up in just a couple of weeks, so stay tuned and don't miss it. But until then, you stay classy, and I'll see you next time. Thank you, everyone.